Climate wars in the Liberal Party, earnings season and a couple of big reports this morning with CSL and Wesfarmers. I'm Paul Rickard and I'm mad about money. Thanks for joining me. Firstly, apologies, Peter Switzer couldn't make it this morning. Missing in action? Question mark. No, he's down in Melbourne. Anyhow, let's deal with the Liberal Party and climate wars because that leads the Australian. Now, this is all about the NEG. Not perfect policy, but I think the last thing we need in this whole climate debate is the people from both sides, left and right, not coming to terms. We need policy certainty in this area. The right are never going to agree because they're climate deniers. The left, they're never going to be happy because they passionately believe in the threat of climate change. So both sides can't be happy. We need a policy that actually provides certainty and constancy in the area, allows for investment. Let's get energy off the national debate. So look, all sides in the Liberal Party toe the party line. Let's move on. Now, just on the subject of energy policy, one company that can't escape criticism is AGL. I've written about the performance of AGL and its CEO, Mr. Vesey. He's got everybody offside. He's got the government offside, the ACCC offside, the regulator offside. Ultimately, this is going to cost AGL shareholders hundreds of millions of dollars, and that's why the share price is where it is. Time for shareholders to take action. Right, let's move on to earnings season. It hasn't been that bad, hasn't been that good. It really heats up today, and I'll come to some of those reports in a moment. But first of all, overall, look, I gave it a bare pass. Some of the guidance statements haven't been as robust as we need, and we need good outlook statements in order for this market to have momentum. Probably the best has been BlueScope. Yesterday, Cochlear disappointed a touch, not with its earnings outcome, but just its guidance wasn't as high as perhaps some had expected. Challenger was also a touch disappointing. Let's move on to this morning. The big one, of course, is CSL. Its net profit of $1,729 million, that's in US dollars. That was up 28%, and that's higher than its revised forecast a couple of weeks back of a range of 1,680 to 1,710. So the market's going to like that. It's going to like its full-year dividend of $1.72, that's in US dollars. That's up 26% on last year. And in terms of its guidance for next year, it's forecast a net profit of $1,880 million to $1,950 million. That's a range of 10 to 14%. That's pretty much what the market was looking for. So I think given where CSL has been priced, pretty high expectations, it keeps on delivering. The market's going to give this result a bit of a tick. Not sure it's going to relate to a huge increase in share price, but the market will be happy at least that CSL sounds pretty optimistic. It has a habit of under-promising and over-delivering. That's what the market's going to be hoping for. This is Australia's probably premier stock at the moment. That's a good result. Wesfarmers this morning also underlining EBITDA of just over $4 billion, $4,061 million, up 4.5%. That's about on expectations. An unchanged dividend of $2.23. Now, there are expectations in the market the dividend might get chopped a little bit. So we had a range of about $2.17 to $2.23. That's okay. Bunnings is again the star with the result, as was Officeworks. On Coles, there's a couple of positives from Coles that its same-store sales growth, that's the all-important comparable store sales, up 1.9% in the fourth quarter of the year. That's higher than the yearly average and shows that there's a bit of momentum back with Coles as people sort of, Coles and Woolworths get a bit more level in terms of the supermarket wars. So some good news for Coles. That bodes well for Coles spin-off later in November this year. A whole lot of other reports, haven't got time to go to those today, but certainly earnings season picks up really picks up today, tomorrow and early next week. We need these reports to be good. We need that in order for the market to break through that 6,300 level. Anyhow, that's all I've got time for today. I'm Paul Rickard. Thanks for joining me, and I'm mad about money.
This content has been prepared without taking account of an individual's financial objectives, needs, or financial situation. It does not constitute formal advice. Before acting, any individual should consider the appropriateness of the information, having regard to the individual's financial situation, needs, and financial objectives. Past performance is not a guide for future performance. AFSL 286531.